Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So as I record this update, the markets have just closed. It's Monday, March 23rd. They finished down again today. And long story short, since the market highs of about 6 weeks ago, the markets are down roughly 37%. It's an unprecedented drop in an unprecedented short period of time. But it was brought on by some pretty unprecedented actions of our federal, state, and local governments, in effect telling businesses and individuals that you don't get to live your daily lives. You have to stay home, you have to keep your doors closed, you have to maintain social distance, as they call it. And that's having an amazing impact on our economy. And the markets have traded down pretty much at every stage of this. I mean, it doesn't matter what the Fed or the federal government or what happens in the economy. I'll give you one example. The markets traded down when we learned that Russia and OPEC couldn't come to terms on a cut in production because of the coronavirus in China at that time. And so oil fell to like $35 a barrel, $32 a barrel. And typically when oil falls to those levels, the stock market goes up because low gas prices are really good for lots of companies. Anybody who's a consumer of gas or oil, low gas prices are a good thing, but the markets continued to fall. Now, as a result of the government's actions telling everybody that they should stay home, well, demand for oil has gone down even more. So now we have oil at $23 a barrel, which again would be good for, typically for the markets, but the markets aren't reacting that way. We've had the Federal Reserve twice cut interest rates. They're now sitting at zero, in effect. That's typically, again, good for the markets. When interest rates go down, people tend to invest their money, and that causes the markets to go up. But that's not what's happening. The markets, right on the announcement of the Federal Reserve twice lowering interest rates, the markets fell. We've had the Federal Reserve also announcing, that it was going to add liquidity to our banking system and to try to make sure that we had some stability of our currency and in the banking system. Again, these are normally moves seen very positively by the stock markets. And, the fear of the coronavirus and this global pandemic, that didn't have a positive effect. So all of the things that typically cause the markets to go up and the economy to improve aren't really having a positive effect, primarily because we have everybody staying at home. There's no way to have a positive effect when, if the banks decided they were going to loan a bunch of money so people could start businesses and buy houses, nobody can go to the bank to sign the documents and nobody can go to the house to preview it to see if they want to buy it. All of these things that are being done to try to help stimulate the economy and thereby protect the markets can't really have an effect until we're allowed to get back to our daily lives. So the two biggest questions I want to answer today are, one, when is this going to end? So I'll start with that. When is it going to end? I don't know. And anybody who says that they do know, you might want to take whatever they say with a very large grain of salt. Because if you'd have asked me 4 weeks ago, did I think that the U.S. government was going to practically tell everybody that they should stay home? I and almost everybody I know would have said, no, that's never happened. We've never done that for any virus, no matter what it was. We didn't do it, during World War II. That just would never happen. And here we are, 4 weeks later, and that's exactly where we are. So the government's actions right now, it's really hard to tell what they're going to do or when they're going to do it. Although I was I was optimistic when I heard Governor Cuomo of New York this morning actually say out loud that he and the people that he works with to get through this situation are starting to have discussions about is what we're doing striking the right balance between looking out for people's health and looking out for their economic or financial futures. Because both of those things need to be weighed in order for us to have an appropriate response to the coronavirus. Now, right now, all thoughts of the economic impact seem to have gone by the wayside, but it gave me a little bit of optimism to see the mayor of New York, the governor of New York, actually say out loud that maybe they needed to give some second thought to the economic impact, because as we've seen, there are some people wondering, is the treatment maybe worse than the illness for what we're doing right now? I don't know if that's the case, but it is nice to know that they're starting to give some thought to maybe there's some other things that we could be doing short of telling everybody to stay home that might accomplish the same goal and not have as major an economic impact. So first question, again, when is this going to end? Who knows? But I do know that as I talk to people, the patience that people have for prolonged isolation is limited. So this can't last months and months, because we the people just won't tolerate it. Right, wrong, or indifferent, I just don't see we the people tolerating the government telling us that we can't live our lives no matter what the cost, no matter what the health cost. So this has a finite duration, whether it's measured in a couple of weeks or a couple of months. It has a finite duration, and the closer we get to knowing that that this is going to end, that people can get back to their daily lives, that's when we expect the markets to start to get back to reacting more normally to economic news. So the second question that I've been getting is, should we sell everything and wait until the markets go back up? So that's a hard question to answer, but let me tell you what I believe. What I believe is the math. And since there wasn't any math that told us what the government's reaction to the coronavirus was going to be, there hasn't been any math that ever predicted the amount of volatility we've seen in the last 6 weeks in the stock market. So unless we're just going to sell because things are going down, then selling right now just doesn't seem like a good idea, because again, once we're allowed to get back to our daily lives, the enormous reduction in economic activity that we've seen in the last several weeks will be replaced by an enormous upswing in economic activity. And since we don't know when that's going to happen, if like, I'll just give you one example. If this malaria medicine that they've been looking at in France is actually deemed to be a good treatment for a significant number of people with coronavirus, that could be a game changer for getting people out of the hospitals and start to flatten the curve, which is the goal of many of the actions that we're taking right now. So we don't know what we don't know. And since the math says that this is a temporary problem that nobody could predict, and because again, the responses to this have never happened ever before in the history of our country, then we're not really a seller right now, because selling now would just feel like selling at the bottom potentially. And then what math would we use to get back in? Do we get back in if the market goes up 10%? Or do we get back in if the market drops 10 more percent? That's not really a math-based decision. That's an emotional decision, and we just don't make investment decisions that way. We don't think you should either. It is, this situation does sort of demonstrate why we believe it's so important for people to have cash reserves. So I do want to say one thing about your cash reserves. Don't be tempted to invest those cash reserves to make extra money as the markets recover whenever they recover. While I do believe the markets are oversold, I do believe that that this is the markets are lower than they should be. I'm not one that says let's abandon our discipline and take our emergency funds and throw them in the market so that we can make a few extra bucks on the way up. Because you just never know, right? What else could the government do that might require that we need access to our cash reserves to live our daily lives and not have to make really bad decisions like, do we eat or make our mortgage payment? So how long is this going to last? I'm sorry to say we don't know, but it is of finite duration because this is not going to persist forever. Should we sell? We don't think selling now is a good idea. Again, because if you sell now, you're basically getting out because of fear, and then there's no telling when to get back in. So we do think people should be patient and maintain their discipline and their emergency funds and their social distance, so that on the off chance that somebody that you know contracts the coronavirus, you don't get it and then become a statistic. So that's sort of a long-winded update, but there's been a lot going on. If anybody has any questions, just let me know, shoot me an email, respond to this video. I'll do my best to answer, but I don't have a crystal ball. What I do have is a math-based approach that over the long haul has demonstrated that it works. So we're going to stick with the math and not be swayed by emotion. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back soon with another Uncommon Sense update. Stay safe, everybody. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.